What's up, fellas? Ray just put together a question for me. What is the 4 hour 9 to 1 range, and why is that so important? I'm gonna elucidate that right now. So, what I've noticed, and what the folks that taught me this thing, what they bank on. One of the things they bank on is range. These ranges tend to hold, meaning like once they're formed, if you're on a bull side and a big bullish range is formed, that tends to remain intact and extend. And certain ranges are more stronger than others. Okay, so let me show you an example of that. And the stronger ranges typically happen during the 9 to 1 trading session. So all of these are 4 hour bars. And what you notice is that the volume, what we have down here is a volume indicator. And that's telling you can obviously see just right off the top that there are certain bars that have high volume, more volume than others. These high spiking volume bars are typically formed during the 9 to 1 session. That's why we say the 9 to 1. No, that's the 9 to 1 bar. This is the 9 to 1. This is a 9 to 1. This is a 9 to 1. Now, why is that important? Because volume determines interest, right? I mean, it's obviously somebody's interested in that price, so they're putting down orders in there. So let's look at this one. This is the first one that started this trend in oil that I've been riding along with for several days now. So this bar was a high volume bar. This is the first one, and it was put in at 1 to 4 session, the afternoon session. So, and you just can see that it did have above average volume. This bar here is telling you what the average volume is, this brown line. And anything above that, we're considering that to be high volume. And we're going to play that. So we're going to say that this is the first bar that the bulls put in. And you can see it was over several sessions. It was tested, meaning the market tried to come back in, the sellers tried to push against it, but they failed, and then boom, it extended, right? So here, this extension happened during 9 to 1 session on last Tuesday. And so let's highlight that. All right, so there's the 9 to 1. Okay, and notice how that remained, that range remained intact. That was from 69 to 71. That remained intact for several sessions until boom, the 9 to 1 on Wednesday created this new range. Okay, let's highlight that range. So volume creates these ranges, and typically, most of the time they remain intact and eventually extend into a new range. So this one went right into a new range, which was on 1 to 3, from the 1 to 4, the afternoon session, but that was high volume too. Now conversely, look at the low volume bars. Low volume bars, not a lot of movement, not a lot of extension, not a lot of energy. Okay, so we want to get in on the energy, ride that current, put our stop loss, protect our profits when these new ranges are formed, and hopefully get in on the next push. And then when that next push happens, you're either going to add to your position, you're going to get into a new position, but you're definitely going to protect all the profits you've been making along the way. That's the backbone of what we're doing. And so when we say 9 to 1, that's what we're referring to. We like those 9 to 1 sessions because that's where the volume is, that's where the big money is. Today we put in a 9 to 1 new range, right? New range here from 76 to 29. So made that range up to 77, pulled back. So that would have been a good add. And if you were already in this trend, say you were in here, right? Say you've been in here for the last several days. Right now, you'd be moving your stop to here because you're assuming this volume isn't gonna come back in and penetrate that. So 9 to 1, high volume, that's typically what I like to play around. If not that, then you go for the other higher range bars, high volume bars. I hope that cleared that up. Why 9 to 1 is so important, but in general, why high volume is important. High volume. You want to trade. You want to be like a little ant that's just tracking along with the big money as it's flowing, whether it's flowing up or it's flowing down. So you can see here, the big pushes are happening during these high volume trading sessions. So you really don't need complicated indicators. The indicators help us kind of micromanage into these ranges. But the real deal is understanding the range and the general flow of the energy. All right, guys. Talk to you later.